Awesome here. I have joining with us today here a remote guest and a good. I would put you into the partner category, Cameron, as far as we have insurance expert and agent Cameron Nichols joining us with us from his Tucson office. Thanks for joining us today, Cameron.
Yeah, thanks for having me. Happy to be here.
Yeah, we've my line to a lot of folks is, we've been doing mortgages up here in Flagstaff for 16 years. We don't take it lightly when we hand out a card or a name, and mostly from the basis of, when everyone's looking for the best deal, it's very much what we hope folks are connecting with us on is expertise. And the insurance world has shifted a ton, not just to boost up your ego right now as I talk through my introduction here, but as the insurance world has been shifting massively, I found it very frustrating. I think a lot of my clients have found it frustrating when they have an agent or someone on the other end that's just kind of shrugging their shoulders, right? Of like, is what it is, or another famous line. And I actually found out that this particular agent was telling a lot of people this line of like, if you own a Toyota, your insurance is just going to go up because Camrys get stolen, and it's like, what does this mean?
Yeah.
Right.
Yeah.
And so, we've had a lot of clients find a great opportunity, success, and expertise from Cameron. And so I appreciate you joining me here today. But give us, just for the audience here, as people see this on social media and so forth, what's your background in insurance?
Sure. Yeah. So I work for Goosehead Insurance. For starters, we're actually the biggest independent agency in the U.S. It just means we're the biggest brokers. So there's plenty of other brokers out there, but I personally have been doing this for about 3.5 years, working with an agency owner that's been in insurance for 25 or 30 and his dad for 50 before that. So just a ton of experience that I'm leaning on from not just my experience and my own repetition, but also from expertise of people who've gone before me and just have a lot more experience. So definitely leaning on them as well. My experience before that was retail management for a couple of years, and then I was an officer in the Army for 4 years before that.
Okay.
And college right before that. So
okay. Very cool. And VA eligible.
So, using it. Yeah.
Love it. And so, but I think it's, again, when it comes to insurance, and I think it's, people hear me say this line all the time, and I just think it's so, I don't know. I think it's valuable. So I keep saying it is like a lot of our financial services, we kind of feel like we're going to the dentist. Right? We all want the smile, but no one wants to sit there with their mouth scraped on for 45 minutes, twice a year kind of thing. And so I think a lot of people feel that way about insurance. They just want to know they're covered and they're safe and protected. But actually understanding their policies changing and coverages and issues. And it's not something that they dig into a lot. So some of the different jargon or way the industry works, they really don't know. And so I think maybe I'm just going to throw some stuff at you.
Sure.
As a general education here for a lot of folks, explain to me that even though I know the difference here, I think it'd be important for audience to understand when you said independent broker, what's the difference between you and say, and you use the term captive agent, so you can explain that to people, but then, your State Farms or all states of the world, just for example, so we're not trying to bash on anybody here, but what's the difference then?
Yeah, so it's really an exact opposite model. So the captive model is, I'm a State Farm agent. I work for State Farm. I can only sell State Farm, and no one else can sell State Farm. So that's what captive means: is you work for that company specifically. That's the only product that you have. So the limitation there, I think, is apparent just by the explanation. And again, not State Farm specific, but plenty of captive agencies that have that same setup. So that just means if you're a perfect fit for that carrier with your specific house, with your scenario, it'll be great and you'll be fine. I would argue, what are the chances that you just happen to work out to be exactly the right fit for them? Versus I'm an independent agent. I've got about 90 different companies I shop through. Obviously, there are other brokers out there, especially like local and Flagstaff, that'll have 10 or 15 different companies, which obviously 10 or 15 is a lot better than having one, but I have the same 10 or 15 they have, plus 90 they don't. They're all A-rated companies, so only working with good ones, but we'll probably get into this later on in the call. They basically just, each company's got a different idea in mind of who, what, and where they want to insure. And so the difference can be just, you've seen, it can be night and day, dramatically different premium and coverages and everything, just based on, did we hit that target or not?
And that's been very interesting to me. I think, and have you seen that difference as well? Because will have a client buying a home, shopping a homeowner's policy, and you'd think, and that's where I think, like back in the day, maybe that was a little more true of like you walk in this door, you walk in that door, it's maybe within a couple $100, and like you already have all your accounts set up here, or for whatever you like, Joe, you go to church with Joe or whatever, right?
Hmm.
It's like, like you just go there. But I've seen like double, right? Where it's like,
Hmm.
okay, it's $2,000 per year here. It's six here, and
Yeah.
it's Are you seeing more of that right now?
Yeah. Yes. For the last like 2 years, I've been seeing more of that. And I think you're right. There's, depending on how far we want to get into like the industry talk. I mean, the short version there is when every insurance company is doing well and they're all making money and they're all happy, anybody can write a competitive home policy for a competitive price. Like it's just not really that big of a deal. Like when I started 3.5 years ago, trying to meet lenders like you, like other lenders that I would go to, a lot of them would say like, we've got an Allstate guy, he's fine. It's not a big deal. Versus today, it's like, oh, you have options. Like, oh, we need options. We need help. So, yeah, definitely seeing that a lot. There's a lot of scenarios with just dramatically different premium, even talking same coverage or better coverage, and not just home insurance. I mean, auto insurance too. And some of it just changes over time. Some of it changes because there's different carrier options. Like we're always adding carriers in if we don't have access, and there's good companies out there, then we'll add them to our portfolio. Like I just had a client yesterday that called me in because their auto insurance is going up to $400 a month, and we just reshopped it to $200 a month with a different company. So it's another thing is even in the long run, you're not going to be tied to one person, and I don't recommend being tied to one specific carrier because what if it's good this year but it's not next year? You got to start back at the drawing board again.
Absolutely.
So yeah, different options make a big difference. And the biggest difference I've seen, I had a realtor that I did like a home, auto, and a secondary home. And between just those three policies, he saved about 12,000 a year, and all the coverages were the same or higher. Several other success stories of 3, 4, 5, 6,000 a year saving. So it can be huge.
Yeah, no, and so, and again, to those listening and watching this here, I have so many different myth debunk things that I want to throw out there just because things have shifted so much. And so, right on that same vein, though, I think let's talk about bundle and save. That was this whole
Sure.
kind of, and we actually, and I said this to a lot of clients when, and it's because we'll go easy, right? They're buying a house. There's so many different, they feel like they have a second job now, right? Of going through inspections and sending me a bunch of documents and, their
Sure.
firstborn, and so it gets all intense there. And so I used to have this line of like, hey, who do you insure your cars with? Give them a call first because we're in a bundle and save economy. But I don't know if that's necessarily true anymore. Talk to me about that.
Yeah, I mean, for one, I don't recommend taking that approach for like starters of saying where do you go with your auto because it'd be the same thing
No,
as a
I've
captive.
changed. I've changed. We
Yeah,
don't do
yeah. I'm just for the
that.
room or for the audience, I think
Yeah.
not a great practice because it's still just they're still just going to get one option there, and it could be the best option, but just yeah, it's only going to be one. So I just lost my train of thought with
But
that
bundle
too.
and
Oh,
save
bundle and
economy.
save
Yeah.
like as a myth or not? Yeah. So I mean, it matters. It matters to look at all of it. Like you spoke earlier to working with experts and like getting the expertise, and that's something that I take seriously and that my team takes seriously here at Goosehead. Um, is we do look at home and auto together every time. We don't always write the auto, we don't always write the home, but we look at them together because as experts, it's our role to look at that whole picture and make sure you're protected correctly, but also look for those bundle discounts. In the bundle discounts can vary so dramatically from different companies. So there are some bigger name captive agencies that I would argue cannot even approach being competitive without bundling because they have really, really steep, like 30% bundle discounts, like
Oh
really steep.
wow. Okay.
And in that case, usually what I find is like either the home or the auto is competitive and the other one is terrible. So
Okay.
usually it's like maybe the home is hyper competitive and it's got a big fat discount on it because you got your auto, but the auto looks horrible compared to what else you could have with the auto. So that depends. There's a lot of companies where the auto discount is not that big of a deal. A lot of the companies I work with will give bundle discounts, but frankly, the bundle discounts aren't really why I'm looking at home and auto. I'm looking at home and auto one because I want to. This is what I do. I want to look at a whole package and understand, what needs to be insured for you. But more importantly, especially like in the Flagstaff market, there's a lot of companies now that are tightening their belts and changing their guidelines. And there's a lot of companies today that will not offer you home insurance unless they're also writing your auto insurance. So we
Yeah.
call it monoline, where it's like a company that would just write a home is monoline. There's
Yeah.
a lot of companies now that don't write monoline, so they just say you can't just get home with us. If you want home, you've got to have auto also. And not every time, but sometimes that company with home and auto is like night and day, head and shoulders better than everybody else for that household. Like I've had times where I'll write a $1,300 a year home and a great auto, and it's only eligible together. But if the client said, no, I refuse to talk auto insurance, I'll never switch, we're not going to look at it, my next best home after that 1,300 would have been an unpackaged like 3,000, because it's just the
Oh,
next
wow.
best in the lineup of like no one else looked better. Everybody was 3 or higher past that. So sometimes that opens up another door. So I'll tell people like I want all the tools in the tool belt. So looking at them together helps a lot so that you can see what that looks like and just get every option available to you.
Gotcha.
Yeah.
Yeah, no, so it's nuance. It's definitely nuance. But
Yeah.
I think the key takeaway there too, and that's where I was speaking with a client yesterday, business owner, and we're talking lots of different policies, right? And I think
Mm-hmm.
that that's where even more for would you say that's true? Is someone that the increased complexity of your insurance world? Are we insuring cars and multiple properties or commercial interests and all these different things that that it becomes then even that much more important to know that not all one place is just going to give you the best deal on everything, that you
Mm-hmm.
might have a couple different insurance policies at a couple of different places. Is that pretty common?
Yeah, in fact, I would argue most common. Like most of the time, I'm placing my clients with company A for home and company B for auto.
Sure.
Usually still giving bundle discounts. Like most of my auto carriers will ask, is home in the agency? And if it's in my agency still, I give a discount. And then the home will ask the same thing. So it's still bundled. But yeah, I would say most of the time I end up placing somebody with one company for home and one for auto that are like easily the best choice for them.
Gotcha. Well, and
Yeah.
I probably should know this. Sorry, do you do commercial as well?
I don't do commercial, but I work with people inside of Goosehead that I can connect for commercial.
Gotcha. So it's
Yeah.
all, yeah. So
Yeah.
very, very cool. Well, and then let's dive into Flagstaff, and you've helped a lot of our clients up here in the Northern Arizona area. Is with the California fires and the concerns of a dry, we've had a dry winter. Like,
Sure.
is Flagstaff uninsurable?
Yeah, no, not uninsurable. Are there properties in Flagstaff that are uninsurable? Yes, probably.
So what would
Uh,
make, I've had one client that has just run into a very, very difficult property. And I should say, full disclosure, of all the loans that we've closed, we have not found a single person that could not find insurance. Doesn't mean that costs can't, vary based on risk.
sure.
But what would you say, where's that line? And obviously, we don't want people to become their own insurance underwriters on this, but as best you can help people define what is going to create either more extraordinary cost associated with the policy, when specifically in the Northern Arizona and fire concerned areas, and what's going to create more of an uninsurable type situation.
Sure. So the uninsurable, I mean, I'll tell you, it's few and far between that I run into that, but there are a few. A lot of times, the uninsurables are just truly reckless fire risk for an insurance company to take on. I mean, if you're 45 miles from the closest fire station, 30 miles from the closest neighbor, and there's trees all the way up to your house, and behind you is like uninterrupted forest, like if a fire comes through, the house is going to go down. So for an insurance company looking at that, it's like they're taking on, if there's a fire, it's a guaranteed total loss. And none of the stats nerds at insurance companies are gonna go for that. So
Yeah.
on the home side, that's where you run into that. With manufactured homes, you can run into some more uninsurable scenarios based on the age of the home.
Okay.
Just as far as like you're asking, like what should clients be kind of watching out for or keen on with the manufactured home, the age of the home is really the biggest thing.
Okay.
So typically, once we're passing like 40 years old for a manufactured home, there's I have every company that writes manufactured homes I can write through, and I think there are 3 that will consider a home over 40 years old.
Oh wow. Okay.
So now, if two of those three decline for fire and the third accepts it, then the price is the price there. There's no more shopping around. There's nowhere to go. It costs what it costs. So the age of the home with manufactured homes is a big deal. So if you get a really old manufactured home, really out in the middle of nowhere, you can run into. I had one not in Flagstaff, but I think Wickenburg or something, really not close to anything, and it was truly uninsurable. So I had to be the bearer of bad news and tell the lender and the realtor, like, hey, gotta move on to a different property or find a cash buyer because it just can't do it. But it's just not common that you run into that. So as far as we call it fire scoring or fire line. Every insurance company uses their own software. They use their own maps. There's correlation between them, but they all have their own way of looking at it. They're looking at, how far is it from a fire station? How big is the fire station? What's the response time? How many homes do they have to service in that area? What does the brush or tree tree area look like around the house? As in, are you backing up to 2,000 homes between you and the forest, or is there nothing between you and the forest? And just looking at if there's either a kitchen fire or if there's a wildfire, what are the chances that a fire department can get there to mitigate the loss or stop the loss altogether versus have it be a total loss? So a lot of factors that come into play there.
So, and that being said, when someone's submitting for an insurance proposal from you, is it all pretty much automated at that point? Or is there ever hey, the automated shows that this is really high risk, but they are telling you, hey, we're going to go in once we buy this house and get it all fire wised up and hopefully reduce cost or make it more insurable. Is there a ability between carriers to be off just the automated, or is it pretty much just automated driven?
Yeah, great question. That's nuanced, but in my experience, doesn't matter to do that stuff. It's usually this software. It's not like I'm punching in all this data. It's all pulled from the address. I punch in the address, and then it's either fired away a yes or no for fire score, or a flag for fire score. Which, if you guys are going online and getting quotes and you're getting flags for fire score, move on. You're not going to get through an underwriting flag in today's market. If there's an underwriting flag, it's considered a cancel. Just save your time and move on.
Gotcha.
Side note on that, but yeah, that's good to know because I've had people say oh, it's a firewise community, or I have 100 feet of brush clearance, and can there be scenarios where that helps? Yes, but very few and far between. I would argue generally firewise and brush clearance, as far as insurance companies go, just does not matter at all. It should matter. I'm not saying it's perfect, but generally it's just the address is good or the address isn't good based on where it is.
Okay. That's super, super helpful. Yeah. And one question I have for you as well. I mean, we've all heard that term. It's just kind of funny how our vocabulary evolves here, that of shrinkflation, right? Are you familiar with that term?
Mm-hmm. Right? Yeah, I think so. Yeah.
You're going to the grocery store, you're like, oh, this soda is the same price, or this bag of chips is the same price, but it's a smaller bag of chips or smaller soda, right?
Right.
You're getting less. Halloween was especially funny, where it's mini size is definitely even more mini. And so are we seeing that with insurance, right? Should people be very careful during renewal stages that all of a sudden, maybe their premiums aren't changing a lot, but their coverage is changing, which actually, ironically, and I'm not an insurance agent, you are, but I think you'd probably make the argument to where market's gone and cost of materials, we actually probably should be going the other direction, right? So I know I just embedded a lot of things in that question, but yeah, what's your thoughts on that?
So I forgot the beginning of that question, but I'll start with the end of that question was should they be watching their renewals really carefully? Yes. Okay. I think that's kind of a misconception. A lot of people will just assume if my coverage changes, if my price changes, my agent will call me, and it's my insurance agent's job to do that. And to break the harsh truth here, it is not your insurance agent's job to do that. It is your job. Your job is to watch that renewal and call your agent if you're not happy with it. You should look at the coverages. You should see if deductibles changed. You should see if your roof changed to cash value from replacement costs. You should be monitoring. And if you're seeing dramatic changes, you should be on the phone with your agent. Unfortunately, the prices of insurance are just going up either way across every company. There's nobody that's really immune to that. But if you're seeing a wild increase that's not, it's just way out of line, you're tripling or quadrupling in your premium, then you should be looking to see if there's something else out there.
Yeah.
You can also just look if you haven't looked in a long time, but definitely should be watching those renewals. Yeah.
How often do you think someone should revisit their coverages?
I think just look at the policy every year when it comes in. So, or every 6 months on the auto, but every year on the home, I think you should just look at your renewal and just make sure it's making sense to you, make sure it's in line with what you thought it was. And then if it's been several years and you're just curious and you're working with like if you're working with me or a broker, you can call back and just say like, hey, it's been 5 years. Is this still the best option or not? Because I have had scenarios where a client's got a premium that didn't really change at all, but we've added other companies since then, and those other companies are actually coming in better for them when they call back. So sometimes you can find better just by waiting.
Gotcha.
Yeah.
And with, so for, let's maybe talk all those fortunate souls that purchased homes prior to like 2022, right?
Mm-hmm.
That before market really accelerated, and we did have a very large amount of appreciation hit the market there. And that being said, what percentage of those folks do you think right now are sitting underinsured?
No idea. Good question, but that's like so nuanced. I don't even think I could speak to that.
Well, I
I
guess
think
you
it
think
depends on if they
it'd
set their
be a
policy
good.
up right the first time, which I guess I could talk to that. As you mentioned, like talking with an expert and that nobody wants to do the dental cleaning, but you got to do it.
Yeah.
Like you'll notice with dental cleaning, with going and talking to Chris's team to get a home, it's not like, hey, name, date of birth, address, email me something. Like it just is not how this business is done or isn't how it should be done. I mean, it can, but I know your team's not that way.
Yeah.
I'm not that way either. And so I would say the same thing. You need to be intentional about how you're setting up your policy. And if you're getting a quote emailed to you, I don't know why insurance agents do that for one, because it's just like, how do we expect people to understand what they're looking at? Like, it's not rocket science, but you need somebody to guide you through it. So I would say the best way to make sure you're not underinsured is just be intentional when you set your policy up so that you're actually understanding what you're covered for, what you're not covered for, why your limits are set the way they are. And then that is not really something that changes a lot over time. So you can kind of have some peace of mind if you were intentional about the first time you set it up, then unless you've changed something dramatically, you probably are okay where your policy is.
Yeah, but I guess to add to that though, if we take Flagstaff, the last has been between like a 4 to 6% appreciation over the last 5 years. Your policies do policies generally accommodate for that, or is that something that you need to be then revisiting annually and saying, okay, maybe your bonus making things. I'm not the insurance agent, but you have like some bonus replacement or different things that
Sure.
can be built in adjusters, but at some point, do you have to then take it on to where 5 years down the road, your insurance did not adjust to where that house that's now, $1 million that you bought for $500,000, 8, 10 years ago because the market shifts. Like
Okay. I see what you're saying.
that kind of question too.
Yeah, I think so. Answering that one actually goes back to like you were talking about doing like some dispelling myths and stuff on this phone call.
Yeah.
So I think I'll hit that right on as that's one of the biggest myths on home insurance is my home value as having any relationship whatsoever to what we do with your insurance. So your home value, like the value that you could sell your home for, has absolutely no relationship in any shape or kind to what we insure your home for. But it's a really common misunderstanding. So we'll see, like, I'm buying a $600,000 home. I should have a $600,000 policy, right? Well, no, not necessarily. So when you're buying a $600,000 house, you're buying the land, right? And what your neighbor's house sold for comes into play, and what the appraiser thinks the home is worth, and what your views are like, and are you in a good part of town with low crime and good access to the highway, all of that stuff. Those are all intangibles, right? We can't insure your highway access, can't insure your views, can't insure what your neighbor's house sold for. So the insurance is just looking at the rebuild cost of the home specifically, so literally materials and labor. Now that can change over time as well, but from what I've seen in the last 3 years, that's more stable, like much more so than
Okay.
home values, which could go skyrocket and drop and like a stock market ride versus, yeah, like when you get your renewal in for your house, usually your dwelling coverage goes up by a little bit just to account for increased costs and materials. So usually that's going up. But that's again where if you weren't intentional the first time you set your policy up, you might have never had enough from the start, or you might have had way too much from the start. Like there's plenty of cases of people buying $600,000 homes that have a $300,000 rebuild cost, and they just have great land and they're in a really desirable area, and people are willing to pay that much for a house. It just doesn't impact what we insure the home for.
Definitely. No, fantastic distinction on that. What other what other myths do you run into on a regular basis of misconceptions on insurance
Yeah,
right
I
now?
want to hit on something you referenced to earlier, like shrinkflation or dry winters and stuff. I had somebody ask me like if it's fire season, should I reshop before fire season? That's not a thing. Like the time
Yeah,
of year for
yeah, yeah,
insurance, you can't game the time of year. That doesn't do anything for your home
yeah.
insurance. The biggest thing, like the biggest conception I see is everybody just has wild ideas on why is insurance cost going up so high, or why is it becoming so difficult to find insurance? And I hear like inflation, I hear politics, I've already heard tariffs, which I thought was hilarious because it was before the tariffs were even active yet. And I was like, it's literally impossible for that to be the case. But even like longer run, I mean, so there's all these ideas of inflation and tariffs or corporate greed or whatever, a bunch of different ideas. And sure, all of those could be factors to some extent. The biggest thing is really just looking at how much insurance companies have been paying in claims versus historically what they've been paying in claims. So when you look at 2024, don't quote me on these numbers, but they're relatively close here. But 2024 had something like 27 $1 billion weather events throughout the U.S. 2023, I think, had 26 $1 billion weather events, and that's compared to the last like 30 or 40 years of like eight $1 billion weather events. So we're looking at billions and billions and billions paid out 2 years in a row, way higher than ever forecasted before. And the reality is insurance is a business. And so if these companies are paying out more than claims, they're taking in a premium that does not work, and they have to make corrections. I could probably talk for an hour about all of the corrections they make. It's not only price, it's also coverage, it's also eligibility, it's also packaging with home and auto and that kind of stuff. But that's really the single biggest thing. Like honestly, the inflation doesn't hold a candle to 28 $1 billion weather events. Like it's just not even close in scale to what we're seeing there. So the other thing people will say is like, well, I'm in Arizona, so like I should have to pay for California's fire, or just it's all California's fire. And California's fire is again a fraction of the 28 billion anyway. It's also Florida, it's also Texas, it's also hurricanes all throughout the southeast. I mean, it's a lot more going on there. And sure, like emotionally, like that hurts me. Like I don't want to have to pay for the people's homes in Florida that got destroyed from a hurricane. But on the flip side, if those premium increases only got applied to Florida or only got applied to Texas, only got applied to California, I mean, they'd have $150,000 a year home premiums, like, and nobody could have
Yeah.
home insurance anywhere. So, like, it's unfortunately just not possible to assign regional damage back to the same region. It just doesn't work that way.
Yeah. Well, and I guess now, and this is then more anecdotal, that you've heard a lot of like, providers pulling out of whole states and things like that.
Mm-hmm.
Like, is that going to be a bigger thing as we see, you mentioned some states specifically there. And if we know, like, all right, what's the worst that happens in Tucson right now? Rattlesnake and a haboob, right? A big dust storm
Yeah,
kind of thing. Like,
yeah.
are there going to be companies that say we want to just stick into safer areas? I mean, do you have any projections on the roadmap forward there on some of that?
Yeah, good question. That's hard to do. That's a good question, but I don't. Arizona generally does pretty well for insurance companies because outside of Flagstaff, I mean, we have what? We have drought and then maybe some wildfire in the mountains, but there's not a lot as far as weather compared to a lot of other states. So I don't foresee I don't really foresee companies pulling out of Arizona as a whole. We just already have seen way tighter belts on fire scoring. So
Gotcha.
fire scoring, the good news is it's generally not like zip code specific or county specific. It's generally like specific to the location, which is much preferable versus like in Texas, there's a lot of companies that just like if it's Clark County, we're not writing it, just not taking it at all. Doesn't matter where it is, doesn't matter what you did. If it's in the county, we're out altogether. So, and then like in California, probably most people know this, most insurance companies don't even want to write in California at all. I don't expect Arizona goes that route. I mean, I don't have a crystal ball, but it just doesn't really seem like it's gonna go that route. We're starting to, we think, see some stabilization across some of our carriers. Some of the renewals are coming back a little bit more reasonable now. We're seeing less of the non-renewals coming back, and then a few companies that are like coming into the market that are saying like, "Hey, we figured this out. We figured out how to score this. We figured out how to price this. We're ready to be profitable. We're ready to grow. Let's write some new business." And they're actually wanting to grow as well. So just reason number 1,000, it's really important to work with somebody that's got a lot of options so that you can potentially connect with those specific companies that are wanting to grow versus some of them that maybe they've had a terrible time in Flagstaff and they're trying to get out, or they've been there for 50 years and they already insure 8 other houses on that street. They're not going to insure yours also, because what happens if a storm comes through? They're replacing 9 homes instead of 1. So another variable there too.
Definitely. No, and I think it's from the educational standpoint, I know some people, again, much less want to talk about insurance, or don't really care to talk about insurance, much less understand the way the business works. But
Sure.
There's a logic. There's a logic to it,
Yeah.
right, on how it works there. Well, awesome, man. And any other kind of passing? I know we've spent enough of your time here on a Friday, so let's keep this one quick and out for people. But any other passing tips or advice for people regarding insurance right now?
Yeah, I think just look early when you're shopping for a home. Look early. Typically, as soon as you're under contract and your inspection period starts, that's the time to start looking for home insurance. Not a week before you close and then find out you can't get it, or it's $6,000 when the lender was estimating $2,000. I mean, so I guess just shop that early. As soon as you're under contract, it's time to start looking, and start looking with somebody that's got more options instead of just one. You can go quote your auto if you want to, but you're gonna see you give yourself just a little mini heart attack of like, oh, my auto declined. Oh crap, am I gonna be able to get this house at all? Like, just, I would say, skip the heart attacks. Work with somebody that's got a lot of options. Start doing that early, and then don't. But also be wary of getting advice from people on like, oh, well, normally home insurance costs X, or well, the previous owners have home insurance there and theirs costs this much. There's so many variables at play, and the person buying the home is one of the 3 things with insurance is: where is the home, who's buying the home, and then what is the house, like what specific characteristics of the home itself. And people always just think it's like just the address, but who's buying is also a huge factor. So your credit and your insurance history and your claims history play a huge role, which is why I think it's important to be wary of people giving you advice of like, this is what it normally would cost, and then like count on that being the number that you're going to be settling with, because it's oftentimes doesn't work out that way. Sometimes works out better, but just it is dependent on the individual location, the timing. I mean, it all changes.
Definitely.
Yeah.
Well, no, and to anyone listening, Cameron's information we'll link in the description, and definitely would highly recommend reaching out. I think it's always, like we said, bottom line, I think is and we promote so much, like it's been a theme of our conversation and has been a theme of our connection is education, right? People just knowing, and if you know, and you're prepared, that's where, man, if you're, if we hit a status on a in our neighborhoods this summer, and you're thinking, hey, I'm going to have to drive away, you should just be thinking of your family, your loved ones, the couple of irreplaceable things in your home, and driving away knowing, not thinking like, oh shoot, am I covered for this? Am I, did I get enough? Like, have those conversations now and early, and I think just the peace of mind comes from the work you put in to understand things, right?
Yeah, absolutely. I always tell people, claim time is not the time to understand how your insurance works. You should understand well before that how it works.
Exactly.
Yeah.
Well, awesome, Cameron. Well, I appreciate you being on with us. Wish you a great, summer season of connecting with insurance and helping our clients up here. We really appreciate everything you do.
Absolutely. Yeah. Thanks for your time. Thanks for having me on.